10 o'clock. We're about ready to begin. Welcome, everyone. Welcome to today's Colorado Theater Guild workshop, Tax Prep for Performers 101. I'm Abner Genesee, and I chair the CTG Workshop Committee, which aims to share content that celebrates and supports the Colorado theater community. We acknowledge the native lands of the Okethi, Sakowin, Ute, and Cheyenne people. Today's workshop is scheduled for 90 minutes and is being tech supported by T. David Rutherford. Kindly turn your cameras on and your microphones off at this time, and please feel free to put your questions and comments in the chat. We are grateful and excited to have this event today and to welcome our speaker, Mr. Mark Christensen of Mark Christensen Associates, LLC. Mark, the floor is yours.
Your bar is pretty low if you're that excited. I guess there's two ways, to start this discussion. And I'm not sure, Abner, where you want people to chime in with questions. Maybe give a little spiel and then we can kind of dive a little deeper.
Yeah, that sounds great. Why don't we begin with an overview for folks who are, new to all of this, and then we can dive in.
Well, there's really two different, questions, and maybe it's some of both for each. Are you an employee that's an actor? Some dinner clubs, some theaters give you a W-2. Those expenses are treated differently on your tax return than if you get a 1099. There's no difference in the deductibility of the expense, just where it's reported. Probably the biggest difference for 2021, which you'll be doing the taxes now, and 2022 is that food and beverage is now 100% deductible. You may recall it used to be 50. Congress, as part of one of the COVID relief packages, threw the restaurants a bone, thinking that if you could write off 100% of your meals, that more people would buy meals at restaurants. Now, there's some ridiculous caveat in there that has to be food purchased at a restaurant. I mean, you can't deduct it from a vending machine. Yeah, theoretically, there's some hair you got to split, but that is one difference. So I guess the question is, and maybe it's both for some people. Maybe you get a W-2 for acting or W-2s for acting, and maybe you get a 1099 for acting. They go in two different places on your tax return. And just from a IRS perspective, which I don't work for the IRS, thank God, you would theoretically have to allocate those expenses, if possible, between self-employed 1099 and W-2, because they do go in different places. Now, how do you do that? I don't know. You could probably go to each job and recognize the expenses that were attributed to each one. But if you're a W-2 person, you would start with a Form 2106, Employee Business Expenses. Normally, in the past, if you weren't an actor, the 2106 form does not exist. Employee business expenses are not deductible. This is not for actors, but actors you can. But part of the Trump tax cuts, for 4 more years, employee business expenses are not deductible, which is really quite shocking. You think all the people working from home, that they would have changed that. They give the teachers a $250 deduction for supplies, and that's it. So if you're an employee, not an actor, no employee business expenses. But that's not what we're here to talk about. So let's talk about the 2106 form. That would be if you're an employee. So you go fill out this 2106 form, and it basically asks you to capture, we'll talk about automobile last, your expenses kind of by category. I try to list them as good as I can, so when I go back next year and look at them, I'll know, oh yeah, we had supplies, we had cell phone, we had internet, we had do some publications, we had professional insurance, whatever. I would say that depending upon your income, you should probably take some of your internet. Home phone is never deductible. I don't care if you say, well, I have to have that to get calls. It's not deductible. There was a court case years ago about a state employee that had a snowplow. And the court said, no, you're going to have a home phone anyway. But I would definitely take some of my home, some of my cell phone and some of my internet as an expense. And I like to write next to it when I take it on their cell phone, 22% or 30% or whatever. And you can be the judge of that. The 2106 form, you have to list your expenses. Obviously, entertainment is no longer deductible for 4 more years. Food and beverage, 100%. But entertainment, I was going to say Bronco games, I probably over here, don't throw up. Bronco games, Nugget games, golf, none of that's deductible. Concert tickets, none of that deductible. Now, if you buy lunch at the golf course, yes, assuming it's a business lunch, that's deductible, 100%. But entertainment is no longer deductible for 4 more years under the 7-year Trump tax cut. This is year 3. So make sure you don't do 50% of the food. Food and beverage, 100%. Then you would want to do your car expense. That can be done either one of 2 ways. And theoretically, you're not supposed to switch between the 2 methods. One is standard mileage. The standard mileage for last year is 56 cents a mile. And this year, 22, I believe it's 58.5. Now, what the IRS wants you to do, they want you to tell them how many total miles you've driven your car and the business miles. If you go through the worksheet of the 2106 or the Schedule C, which we'll talk about in a minute, he wants to know. Now, you don't have to, but I try to, if I can, put beginning and ending odometer readings in, because that'll help me figure out the total mileage, obviously. But they want personal, business, and commuting. They're just after your business percentage. That's all they're after. But I've been to IRS audits, and they didn't even particularly care about the business use as much as the odometer reading. And generally what I tell people, if you take your car to the same place to get it repaired, you can go and get repair receipts from around, now it's never going to be exactly 12 months, but it might be February 1 year and October the other, but then you could extrapolate your mileage. But keep track of your business mileage, and a lot of people dismiss what business mileage is. I think you need to be aggressive with that. If you go to the store to get supplies or a musical sheet, or you're buying sheet music, or I mean, that's probably old school, that trip's deductible.
Right.
If you go to Office Depot, that's deductible. When you go have your food and beverage with David, which I always call him Dave. I don't know what the T is for.
It's silent. The T is silent.
Just like you are right now.
Indeed.
So when you do your automobile expense, you can either do standard mileage. And if you do that, regardless of which method you use, I'll talk about the second method in a moment, you need to put total miles and business miles. Okay? Now, if you have more than one car, then that muddies the water some more. I don't think care what it is. They just want to know the business percentage. Now, that includes the 58.5 this year cents per mile, insurance, gas, maintenance, repairs, etc. So theoretically, some people ask me this question. The second method, which is better, the second method is actual expenses. Now, keep in mind, it's only the business percentage of the actual expense. That's why they want your mileage and the business part. Let's say you drove 12,000 miles through the year. Your business miles were 1,200. You could take 10% of your gas, oil, maintenance, and insurance. 10%, not the whole thing, 10%. 10% of your lease payment. Or you could take 1,200 miles times 56 cents or 58.5 cents, whichever you want to do. Now, the one piece missing out of the actual is you can also take depreciation on your car, which we haven't talked about. That does add to it. And then you put the percentage of expenses method is more cumbersome paper-wise because you got to keep track of your gas, your insurance, your maintenance, your repairs, and then you take X percentage of that. But it's either or. You can't say, well, I had a lot of repairs this year. I took standard mileage last year. Now I'm going to take action. You can't do that.
You have to do one or the other.
Correct.
And then as far as mileage, are there categories of things that we might not think are, that are business miles?
If you drive between, if you go to your, like a regular 2 job at a hospital, then you go do acting, that trip's deductible. Okay. Mainly mileage, if you go out of town, the parking, the cab fares, if you drink, maybe you take Uber, those trips would be deductible.
So the actual Uber expenses.
Absolutely.
And then, of course, as a performer, going to the auditions, and then of course, rehearsals and performances.
All that's deductible.
Everything related to that event.
The one thing that does not, I'll give you a caveat on, is dress attire. The IRS has a rule that, I'm not saying you're going to like this, that clothes are deductible only what's not suitable for wear outside of work. Well, I had to buy a suit. That's what's suitable for outside of work. What I think unsuitable for outside of work means steel-toed boots, coveralls, safety glasses. Those are deductible. But because you had to buy, now if you're an acting and you had to buy a ferry suit, probably deductible.
Or tux.
Well, but a tux is suitable for outside of work.
That's the
I mean, you can draw the line, I guess, but the rule is what's suitable, not what you can wear outside of work. What's suitable for wear outside of work. Steel-toed boots, coveralls, etc. Now, if it's a special costume, I'll let you draw the line there, but the rule is what's suitable. I've had TV personalities, not actors, say, well, I had to buy all this wardrobe. God, I'll bet you look good. That's what I tell them.
Hey, Mark.
Pausing there.
Mark, we have a question coming in from Laura Love. Is there any distinction made for electric vehicles?
There is a tax credit at the federal and some state levels for electric vehicles, correct?
But there's no difference in terms of the
No,
mileage?
standard mileage, your actual expenses, that's correct.
Okay.
Thank you.
You got to be careful with the electric credit because only the first X number of the cars manufactured qualify for the electric credit. So if you buy a Tesla now, you may not get it, or it's reduced what it used to be 5 years ago because they met their expectation. So the vehicle expense, most people find it just easier to do standard mileage.
Right.
Because all you got to do is keep track of your beginning and odometer. There are some apps. I know Apple has one. I think it's called Mile Tracker.
Yeah, I use the IBM version, which is Mile IQ, but there are a number of apps, like you said, out there that constantly run on your phone, and it's a matter of every time your phone moves.
It's just like anything, you got to chart it, stop and start it, but correct.
Well, actually, with some of them, it will add a drive every time your phone detects that you have moved.
There you go.
And then at some point, you have to go back in and say, well, this was a personal trip or this was a business trip, and provide the. But at the end of the year, you've got that total automatically there.
Correct.
And they're not expensive, but and as a part of that, you put in your beginning of year and end of year
That's
mileage.
beginning and ending odometer. Correct.
And so the report that comes out of that, just print that out, give that to the accountant, and go from there.
The IRS, like I said, they're just after your business use. That's where they want to know your total miles. They don't. I mean, think about it. You don't tell them anything other than, hey, I drove 1,200 miles. Well, how many total miles did he drive? That's my next question. Was 1,200 your total and 1,200 is business? So that's why they want to know that, just to get to the business percentage piece.
Hey, Mark, Lindsay asks you to clarify just one more time. It sounds like if someone's ever done a standard deduction for mileage for the car 1 year, they can never take the actual expense in another year. Is that right?
The simple answer is yes. There is a way around that. I believe you can go the other way, and your standard mileage deduction goes down if you took depreciation. But that's too deep. So yes, you can't switch. Correct.
Right, to keep them separate. Okay.
And theoretically, if you have more than 5 cars, you can't use standard mileage. But no, I don't think we have that issue here. But so if you had a fleet of vehicles more than 5, you were required to use actual expense.
So
thank you.
One other question, as far as
I'm sorry to interrupt. If you did take actual expense, do not forget your car interest as well. Because times the percentage of business use, that would also be deducted.
So interest on the car payment.
Correct. You don't take the payment if you take actual expenses. I get that all the time. Hey, about an $80,000 car, I made $10,000. No, you depreciate the car. The payment doesn't matter. It should be close to the depreciation, but you want to make sure you get the interest if you have interest on your car loan. Again, it would be times the business use. I'm sorry. Go ahead, David.
Well, one thing that particularly as stage actors and even on camera actors as well, we're often in a place where we have to buy costume pieces. Mm-hmm. So, and that may be it may be standard street clothes if it's for a particular shoot or something, or it may be like a puppet, that kind of thing.
Brass knuckles, whatever.
Well, actually, yes. I mean, whatever, or some kind of stage weapon or whatever.
Let's not go there.
Yeah, I know. But
let's not go there.
Is that deductible?
Again, clothes, if they're not suitable for outside of work, yes. But I mean, even if you took all your clothes you bought for acting without splitting the hair of what's suitable for work, how much is that going to be? $500?
Well, it depends, but yeah.
I mean, that's not a material number, but the IRS looks at it as what's suitable for wear outside of work. That's the line. Does that make sense, Abner?
Yes.
I did ask if you liked it. Make note of that.
Yeah.
So if you're an employee, you fill out this 2106. It's a 2-page form, and that then goes to another form to the 1040, which we'll get to in just 1 second. I would say maybe look at Davis, your question about what's missed, maybe like dues and publications. If you subscribe to some acting magazines, Cigar Aficionado, because they got ads in there for whatever.
Yeah.
I don't know if actors have, I, for example, have Arizona Emissions Insurance. You have insurance as an actor?
Well, yeah, you can. It depends.
That would be a deduction.
But you also have, the two actors unions,
Those dues are deductible.
which would be SAG-AFTRA
Those
and
dues are
then
deductible.
Actors Equity Association.
I think any office supplies you buy, I would call office expense, office supplies. Some of your home internet, I'll let you determine that percentage. I guess the percentage to me, although it's kind of an arbitrary number, would be how much did you make? If you made $1,000 and you made $100,000 on your W-2, you're gonna have a hard time selling 75% of your internet is for your acting. But some, for
Right.
sure.
Mark,
Same.
another question from Brian. Would dues from other actor organizations be admitted, such as Colorado Theater Guild?
Absolutely. Any dues, correct. Correct. Country club dues is not deductible, but Lions Club, Kiwanis Club, this type of
Good
stuff.
morning, Mark. Ron Thorne.
Yes. Good morning.
Good. How about you?
Things are good. Thank you. What is your question, sir?
Good. So where are we at with this?
Well, we have been going on here for a little bit, and if you have specific tax questions, you can certainly put that into the
Well, looks like you only have the total of 8 showings.
put that into the chat, and kind of we'll go from there. Were you through with the?
I can continue. The 2106 form, you complete that, and then by matter of the program, that will send you to Schedule 1, Part 2, line 12, where that same number from the 2106 goes, and then that same number goes to line 10 of your 1040. So if you just follow through, that's where it goes. If you're using a program, I would think it would automatically force that to go if you just did the 2106.
Hey, Mark. Folks, I'm going to ask if you could please remember to mute your mics. That would really help us. And Mark, we have another question. If you could please clarify just one more time the difference between business miles and commuter miles for the uninitiated.
Commuting miles theoretically is when you drive back and forth to your W-2 acting job or your regular day job. That's commuting. Okay. Now, what's business would be then if you drive from that job to somewhere else. That's deductible. Did that answer your question?
So if you got a day job,
That's your commuting miles.
you drive to that day job, but then on your lunch hour you go to an audition.
That's deductible.
Just from the day job to the audition
And back.
and back.
Correct.
And okay.
Did that
Thank
answer
you.
your question?
Yes, thank you.
Yes.
Or like in my scenario, where occasionally I will do an on-camera job that actually generates a W-2. So at the end of this time of year in January, I'll get a W-2 from whoever the paymaster was
Correct.
for that job. But I also do other contract jobs where they give me a 1099 at the end of the year.
Right.
So I need to do a Schedule C in addition.
To the 2106.
Right.
Correct. One thing I normally tell people if you're not an actor and you have commuting miles is, like for example, let's say your bank is across the street. You drive to the bank, that's your commute. Then when you drive to work, that's your business miles if you're self-employed. Okay. Any other questions on the car or the auto?
Not right now. Thank you, Mark.
Yes, sir. Now, if you're self-employed, Schedule C, that's the form you would fill out. I get a question a lot of times, hey, should I incorporate? I think people sometimes are misled by, well, if I'm a corporation, I can write off everything. A write-off is a write-off is a write-off. It doesn't matter what the entity is. You might want to, you only become, I would think, in my opinion, a single member LLC. You'd still file your Schedule C, your self-employment, part of your 1040, if you're worried about liability. Because if you're a single member LLC, you still file a Schedule C, part of your 1040, but if you ever get sued, I can't imagine. They can only sue the entity, get the money out of the entity, not your house, your car, etc. So if people ask me, I say just become a single member LLC for liability reasons. Now I realize everybody has insurance and homeowners insurance and umbrellas, and it's very litigious out there. David, that's a big word. Just nod your head, not smart.
Litigious.
There
Got
you
it.
go.
I'm with you.
Okay. That what advice. So if you have a Schedule C to fill out, that's also part of your 1040. And the expenses are the expenses are the expenses. There's a better list of them on this Schedule C. Line 8, for example, is advertising. Line 17 is legal and professional. I would probably try to write off some of if I bought tax software, I think that would be an expense I would put on the 2106 because I could do my own taxes except for, and they're not going to argue with it. I mean, what's TurboTax, $50, $40?
Whatever, yeah.
I would take that as a deduction, either on the Schedule C for self-employed or on my 2106. Same thing on the Schedule C. You need to declare standard mileage or actual expense. Now, if you have a profit on your Schedule C and you're truly self-employed as an actor, you can then detect some of your health insurance on your Schedule C. It doesn't reduce your self-employment income, but it reduces your income. But you can't use that if you have a loss on your Schedule C. Same with home office. If any of you have tried to do home office and take the deduction there, you can't do it if you have a loss. Now, home office, there's two ways to do that. The best way to do it, and this would also be okay with a 2106. There's two ways to do it. I highly recommend and personally only use the first method, which is the simplified method. Years ago, probably, I say 5, it's probably been 10. The only way to do home office previously was you take the percentage of your office divided by the square footage of your house and use the 10% example again. 10% of my Excel, my power bill, my water bill, the fence string, blah, 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 blah. The problem with that and why they came up with the IRS came up with the second method is because when you go sell your house, that 10% of your gain is not excluded because it's business property. If you may be thinking, hey, I own my house 2 out of the last 5 years, I can exclude my gain, depending upon the number. You can accept that 10% for business use. So the IRS saw that. To counter that, the IRS offers what they call a simplified method, kind of like the standard mileage. You get $5 a square foot for up to 300 square feet. Now you have to have an office. I mean, if it's 200, then you still get $5. But then you don't have to keep receipts for anything. And if you really think about it, it's a simpler bit. How hard is it to keep track of 12 utility bills, 12 cable, blah, 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 blah. So I just encourage people to use the standard. It's called the simplified method. $3, $3 or $5. The most you take is $1,500.
Now, are there rules as far as the use of that space?
The IRS in question would want it to be exclusive and regular. And where you run into trouble is a person with a 1-bedroom apartment say, hey, I have a home office, my kitchen table. Well, that's not exclusive and regular. I'm not saying I wouldn't do it. I'm just saying if the question,
Right.
That's not exclusive and regular. That is their two big words, exclusive and regular.
So you would ideally have a separate bedroom.
2 bedrooms, you have our study,
Right.
a den, a loft, a basement. Correct.
That is only for use by your business.
Theoretically correct.
Right.
Correct. Now, again, I've never had the IRS come out to somebody's. I mean, it's a $1,500 write-off at most. It's immaterial, but yes, that's correct.
So are there other specific rules or reasons that you would or would not want to incorporate?
I don't encourage people to do that. I mean, normally, at least initially, my theory is I don't want to make more money for me. I want you to do what's best for you. And normally people come in a ball of fire. I'm going to be an actor. I'm going to get this job and that job. And let's incorporate, do W-2s. And then 2 months later, they're working on another job, doing acting on the side. And they spend all this money on me, they incorporate and everything else. I say just start out as a sole proprietor, see how things go. Then if you start making substantial into hundreds of thousands of dollars, then we can talk about S-corp, partnerships, whatever. Correct.
Right.
You got to remember when you do anything other than a single member LLC, there's another tax return involved, which some people would tell you that, well, that doubles your risk of audit. Although the risk of audit is nominal. I mean, I could bend down and point on the floor anymore.
Right.
But theoretically, you have two buttons in the pool instead of one to get audited.
One of the things you mentioned earlier is, with a Schedule C, if you show a loss.
Correct.
And are there limits or rules as far as continuing to show loss year after year?
T. David, that is a very good question.
I ask because I have been in that category from time to time.
People, it's actually called the hobby loss rule. What the IRS, theoretically, they're going if you've lost money 3 out of the last 3 years and 5 years, they could potentially tell you, no, acting is a hobby. This is just ridiculous, loss after loss after loss after loss. And to counter that, you have to try to prove, hey, I had my website, I had business cards, I had a separate phone line, I had
union membership,
all these other things. The best example I can give you is an audit I went through with a Delta pilot that flew international. He also was a race car driver. He spent hundreds of thousands of dollars on motors and engines and trailers to pull this shit around and driving, Ford F-350, and was training with Big Daddy Dungarlis, raced at Vandermeer. I'll go in for the audit. The guy questioned everything in order. 2 hours later, the guy says, no, you're a hobby. So he hired a tax attorney. We ended up winning. But he spent money to do it. But I could see why they would think that because the guy's a speed junkie. Hey, you're just doing this for fun. Now, it was a business. But theoretically, 3 out of 5 years, you're supposed to have a profit. Now, will the audio automatically? No. What's the downside to having a hobby loss? All of your income goes on your Schedule C. Your expenses aren't deductible. So yes, there are some limits there.
Yeah.
Abner, does that make sense?
Yes. Thank you.
Abner, how am I doing so far? Okay.
You're doing great. We're so grateful to have you. This is outstanding. Folks, if you have any other questions, I encourage you to go ahead and put them in the chat. With this amount of people, sometimes it's hard to catch people on screen and catch hands up and things like that. So go ahead and put them in the chat. But this has been wonderful. Thank you, Mark. Again,
Abner, your bar is pretty low, but thank you. The main thing is just try to be reasonable. They're not going to argue if that trip really wasn't business or it was. I would think the amount of mileage you're deducting in a year, if I'm just thinking of a normal person that has a day job and then acts, a couple thousand miles is going to be a lot, I would think. And the government should not have a problem with that. Now, if you continue to have a loss after loss after loss, then you have a hobby loss problem.
Well, it's like, and of course, in the last year and a half, because of COVID, a lot of the auditions, at least in the radio and film side, are moving to Zoom, just like we're doing today.
Right.
They really are. It used to be for film, and you had to schlep downtown to whoever the casting agent was and so on. Now, a lot of those are on Zoom. So that's really cutting back, at least in my case, on my travel mileage.
Well, but maybe you're deducting your computer.
Well,
and Zoom for that.
That was where I was going with that. Then Zoom is a deduction.
Absolutely.
So other business software.
And some of your internet, et cetera, correct.
Right. So, and then if there are any other subscriptions, software subscriptions, and so
Spotify, forth. Perhaps, Pandora, one of the other music services, Amazon, whatever they are.
Yeah, Amazon Music.
I would think, depending on what you do, absolutely you can make that case. No problem. Really what you're trying to do with a deduction is find some leg to stand on, something you're already paying for that we can call business.
Right.
If I can say that in the PC correct way. Hey, my Never Post subscription, I'm going to deduct because there's ads in there for actors or there's nightclubs that have whatever. You can make the case. I deduct my Never Post subscription because there's other tax preparers in there and I want to see what they're charging and what they say and da-da-da-da-da.
Well, the other thing that I do for computer expense is that I have a backup software that I use. In this case, actually a couple. The subscription where it backs it up to the internet, to the cloud. That's deductible.
Correct.
All of those little categories. It may only be $100 a year, but all of that adds up.
Got you.
And that would be, in this case, probably Schedule C.
Correct. Now, going to mention a couple of other things. You wouldn't really have a hobby loss rule if you filled out a 2106, meaning you're employed. But I would caution you if your W-2 from acting is $1,200, you can't have $10,000 in acting expenses on the 2106. Well, you probably can, but I wouldn't suggest you file it. Now, let's just get really crazy. And then I'll go to questions. let's say that you're actually very profitable and you have a Schedule C business, okay, and you have children. The key thing is they have to be your children under 18, and you're filing a Schedule C. You can put them on your payroll, pay them wages, deduct it. They owe no tax. And then what I would do is fund their Roth IRA. That's deep, but that works. For example, my business here is an accounting firm. I'm a Schedule C. I give my son a W-2 every year for $3,000-4,000. He doesn't have to pay any tax because that's all the income he makes. I write that off. I pay no FICA, no Social Security. And then I fund his Roth IRA, which grows tax-free. He never sees the money. He doesn't know anything about it. That's deep, but you have a question about the engineering. But that's generational transferring of wealth is what you're doing.
But
my son's Roth IRA, he just turned 16. There's $26,000 in there. If it continues to go at the 12.32% American Funds grows, at 65, it'll be worth over $2 million, tax-free on 26K. And I get to write it off.
Thank you, Mark. We have a couple of other questions coming in.
By all means.
One is if you would please talk a little bit about multiple state filings and how that works.
That's a very good question. Where I normally run into this is with professional athletes, or even Mick Jagger. Van Morrison comes to Red Rocks. Colorado's going to want their tax from him performing there. And again, professional athletes, they have to pay tax in every state they play in.
Oh.
And the NFL has rules for practice days, player days, and it's relatively confusing because when the Broncos, again, sorry about the Bronco reference, went to the Super Bowl, where was the Super Bowl? It was in New York, but it was in New Jersey. So they have to file New Jersey tax returns, etc. Now, when you do that, the good news is you don't have to pay tax on the same income twice. You do have to file, let's just go with Nebraska and Utah. I'm sorry, Colorado and Utah.
Okay.
So you had a W-2 or a 1099 from Utah. So you're a full-year Colorado resident. You're going to file a non-resident Utah form. Hey, I'm a non-resident. And probably the only reason you're doing this is because one of the state authorities got your W-2 or your 1099. So then you allocate your expenses, your income between Utah and Colorado. Colorado, you're going to pay 100% of the tax, but you're going to file a return in Utah. Any tax you pay in Utah, you're eligible for the credit in the other state. The problem is it's never the same dollar amount. Because, for example, in Colorado, if I pay California tax of $1,000, Colorado's going to give me a credit dollar for dollar of maybe $500 because California's rates are 15%, Colorado's are 5%. They're not going to give me a deduction in Colorado 15 for the 5% rate. So you're really paying all your income in Colorado and then paying extra tax in Utah, but you get that tax as a credit on your Colorado return. Not a deduction, a credit. Does that make any sense?
It does.
Now, if you really go back to the Midwest, it gets even more crazy because there's city tax. New York City has a city tax. City of Akron, city of Dayton have city tax. Not like our occupational privilege tax here in Denver, where it's $3 a month per employee, whatever. They actually have city tax based upon what you do. If you're an actor, then you got to fill out another schedule. There's actually city income tax. As crazy as that sounds, but they got to get the money somewhere.
Mark, we have someone else who asks, can I use printed bank statements as my receipts for deductible expenses? They show date, where the purchase was, etc. Can they use it in that way?
I've never had a problem on doing that. The answer is no. The IRS would require you to have the receipt. Now, I've never run into that. I've given the IRS statements, and generally, if it's an ongoing bill, like your Amazon bill or your cable bill, 1 month extrapolated, you do the math. But I've never had a problem doing what you suggested, Abner. But the answer is no, theoretically, legally, no. And I have had IRS agents and audits actually Google something. Oh, he's paying for this. What is that? Oh, I see. It's an acting school. Okay. So the answer is no, but yes, if that makes any sense.
I see. Thank you.
Are there any other questions?
Yes. So are there specific categories, and of course, we're talking about actors and performers, but that people tend to not consider that are deductible?
Well, I think the mileage, the dues, the office expense, the entertainment. I mean, anytime, the food, food and beverage. I think anytime you go out to eat, that should be pretty much deductible expense because you're going with other actors, whatever. If questioned, they would want to know who you went with and what was the result of the meeting.
Right.
That's no big deal.
Assuming it's business related.
Correct.
One of the other things, and this kind of is crazy, in the old days, there at least was a rumor out there that being a member of SAG, Screen Actors Guild, that you didn't have to pay for a movie. That is no longer the case, and it hasn't been for decades. But since I'm a member of SAG-AFTRA, is going to a movie, any movie, deductible?
It's a very good question. I would say if you got questions, they're going to say no, but I would say probably yes myself. I would take it. But again, what's the materiality of that number? You go to 10 movies a year, that's $200. Who cares?
Well, I mean, and of course, in the last year,
You can't go to a movie.
not very many.
I would say no if they questioned it. I mean, kind of like the home phone line, you're going to have a home phone regardless. Anymore, probably not. But no, I don't think you. I understand where you're coming from, and I would take it as a preparer. If I prepared your taxes, I would take it. But if you get questioned, they're probably going to say no.
Yeah.
And Mark, that would go for tickets to live events as well, right?
I would allow that more. I'd be more happy with that than a movie. Because that you've got to have a specific interest, no offense, to go to. A movie could be, well, I like action movies. That's more common to me. I don't go to the theater. I'll go see a play once in a while with my group, but I got to go. You know what I'm saying? So I would say that's more feasible for me to believe, yes, deductible than just a movie. Did that answer your question, Abner?
Yeah. In that scenario, where you're deducting your actual price of the ticket to go to Denver Center, to Arvada, wherever.
And the limo and the food downtown as well.
Would that be applicable whether or not you're in the union?
Absolutely.
Okay.
Absolutely.
So there you go.
Thank
Lots
you.
of good questions. Anybody else out there got something to throw at me?
Now's the time, folks, to take advantage of Mark's obvious expertise here. And it's not a low bar.
I do have a question only because I'm multitasking. I can't type it. But
Okay.
Go
right ahead.
Hi. Okay. So I just wanted to clarify that. So you're saying that you can deduct tickets to purchase a ticket to see a show. Is that also part of the deduction, like Denver Center or even the local theaters?
Absolutely. I think so, yes.
Okay.
I would have more comfort with that than just a movie ticket because everybody goes to the movies.
Oh,
Just
okay. I
going to
see.
the theater, to me, that's an extra step, an admission of, Abner, you know, try what I'm saying. What's a good word for me to say there?
Okay. Thank you.
Somebody
And
else.
Mark, I'm
somebody-
sorry. Go right ahead, David. I stepped on you.
Somebody else had asked about Dropbox and things, which I
That would
would
be a deduction.
I would
absolutely.
consider that
Absolutely.
to be, because I also
That's just like Zoom, correct? Same
Yeah.
thing.
Well, yeah, it's a file transfer.
Right, but same thing. If you're
Exactly.
getting out for business, absolutely.
Yeah, Lindsay had indicated that as a voiceover actor, we do that a lot. I also do a lot of voice work. So yeah, absolutely. I'm using Dropbox and actually a couple of other products. Box is another one that's out there, box.com. And they're basically file transfer.
Yeah, anyway, I use Citrix, same thing.
Yeah, same kind of stuff. So pretty much anything having to do with the computer that I use to either transfer files, backup files, anything relating to my business, that's deductible.
Absolutely.
But it's a matter of keeping track of that.
And or what percentage, correct.
Right.
Correct.
Mark, Laura asks, for designers, would membership for art museums be deductible as design research expenses?
You have a stupid question. What's design mean? Like stage design?
For example, Brian he does set design, so that he designs the set.
Okay.
Also does lighting design,
Okay,
the
okay.
lighting plot.
Okay.
There's sound design, there's costuming, and so forth. Those are all considered to be designers.
Yeah, I would say that's a deductible expense.
Yeah, I spent some time doing some tax workshops with folks out in LA who are doing the dual auditioning for film, media stuff, and theater. And almost all of them were using, if they went to a specific exhibit at an art museum, or if they had a full membership, like a yearly membership, and would justify to their tax preparer that it's part of their research plan.
Yeah, I got
Anytime
no problem with that.
stuff.
Again, the materiality is minimal. Absolutely.
Yeah, they never got any pushback.
No,
They had to be audited.
Correct.
Bruce had submitted an interesting question, at least for me, at least, that as a SAG-AFTRA member, and right now we're in the viewing period. We're coming up on the SAG Awards, which will be in February. At the end of January, we have to place a vote of what our favorite categories are, or favorite films are,
Okay.
in the different categories. He makes he asks the question: if there are charges of seeing a film in order to see it in preparation for
Absolutely,
that SAG-AFTRA.
absolutely. That would be a deduction.
So
But I took your question earlier to mean any movie you go to is a deduction.
that's
And I
that
would
was-
say no to that, but again, it's not material.
right. But yeah, and they've changed it somewhat this year. In past years, as SAG-AFTRA members, they often send out screeners, which are, DVDs and so forth. They, I don't know about you, Bruce, I've not gotten any screeners this year. So,
Everything's online.
yeah, so that's rather disappointing. It was kind of nice having the disc, but things change.
Unless they're being sent late. I mean, I haven't received any either.
I think we're not getting any. It's what I think. But
Yeah.
There you go. Any other questions?
Was I okay on the dual state thing? Anybody have any questions on that? Was that okay?
Yeah, it was fine. I just was asking on behalf of other people. I'm not filing multiple state this year, but I know it's something that folks who couldn't be here today do want to know a little bit more about. But I always tell them, like, talk to a tax professional for sure. Don't try and figure that out by yourself. You'll tear your hair out.
It's crazy what you mentioned with NFL players.
Absolutely.
That every state, I mean, they're in a
Well,
different.
think about it. They're here working. If Mick Jagger comes here and does a concert, gets paid $3 million. Damn straight I want my tax money from him. He performed in Colorado. And his accountant knows that. It's not a big surprise. Okay, here you go. Here's what, of course. But he gets credit for any Colorado tax in his home state. So I have some people that file returns in 5 or 6 different states. Most of that nonsense comes from a K1 from some oil partnership. They got oil royalties in North Dakota or a tree farm in Alabama. But they file returns in all those states, pay tax in those states perhaps, and then Colorado gives them a credit for all the tax of those 5 states. Now, it's probably not dollar for dollar because the rates are different. But it makes sense. And I've seen NFL players get letters from state departments of revenue for not filing returns. I mean, it's not that hard. They go to the game, they look at the roster for the day. Hey, let's look this guy up on the database. We didn't file it. Well, he didn't even stay with some special teams guy. Nobody knows about him. Didn't file a return. Here's your letter. Guess what, buddy? Pay up.
Yeah, you get your nasty gram
Exactly.
from the state.
Exactly. How'd they find me? Like, really?
You're a
You're one
professional.
of 55 guys on an NFL roster in the city. Come on.
Oh, yeah. Any other questions?
So that surprises you about that.
What's that?
It surprised you, like with Mick Jagger.
Oh, yeah. Well, I mean, you wouldn't think about it, but of course, yeah, they were
Hell
attacked.
yeah. I mean, he's an easy target.
Oh, yeah.
Here's the Red Rock schedule. Let's look at what we got here.
Well, like you said, looking at the roster for each team, for
It's
each
not that
game.
hard. It's in the paper that day.
Oh,
Go to
yeah.
the game, whatever, buy a program, where it is.
There's this thing called the internet, which
Exactly.
people go out and
Exactly.
look things up. So
And what if you went and didn't play? You still got to pay the tax.
getting into how many Super Bowl rings does Tom Brady have? Yeah.
Exactly.
And is he going to get another?
Well, it was confusing because when the Carolina Panthers started playing, they played at Clemson, which is in South Carolina.
Yeah.
And now they play Charlotte, which is in North Carolina. So it's baseball players. Oh my God, that's even worse because there's more games.
Well, 150 some games every year.
162 divided by 2, so there's 81 road games.
Right.
Now Texas, Florida don't have state tax, so that helps.
Yeah, but they play all across the
I
country.
understand. You're correct.
So
They have to file returns in all those states. And if they don't, they'll get caught. And all they do is complain about their bill. And then they want to give me an autograph card. I'm good.
Yeah.
I'm good.
Another question coming in, Mark. Can you talk about unemployment and tax filing, especially in the last few years, what we've experienced with the pandemic?
Oh my God. Last year, well, normally prior to 2020, if you got unemployment, it was taxable. Then last year, and this year in 22, it's taxable. Last year, if you recall, I will walk you through the timeline on that. $10,200 per taxpayer was excludable if you were under, I want to say, 150 of adjusted gross income. Now, that's only a 1-year thing. Now, the thing that muddies the water there, some states didn't accept that. Colorado didn't. You had to add that back to Colorado if you got unemployment and deduct it from your federal. To make matters worse, when it started out, if I filed your return right now a year ago and you had unemployment, it was taxable because they hadn't changed the law. So I filed some returns last year in January, early February, incorrectly, but right at the time. Because at that time, they hadn't passed. In March, they passed the bill in March of 21. Hey, your 2020 unemployment, here's the caveat. But prior to that, my software was correctly counting it as taxable. Then I filed some incorrect returns. And then Colorado came and said, no, you got to add it back. So then I had some Colorado returns that were incorrect, not intentionally. But the thing is, the 10,200 exemption, it was excluded. Now, the other thing was odd, although I have found it to be true. For example, the returns that I filed after last year in January that had unemployment included on them that was wrong, the IRS had so many of those that said, do not amend your return. We'll fix it for you. And by God, they actually have. Now, it took them for Lord knows how long, but I got a call in the summer. Hey, Mark, I got my check for $650. Oh, don't you remember after that was oh, that's right, it was the unemployment that we paid tax on that we didn't. But some states, 13 states, Colorado's one, did not let you exclude the 10,200. So in Colorado, when it all got settled, not taxable 10,200 if you're below AGI threshold, but taxable to the state. Crazy, huh?
It is crazy. Thank you.
Did that answer?
Leah, did that answer your question?
Yeah, it just confirmed kind of what I'd been hearing about stuff with last year. Because yeah, trying to file taxes last year was a mess. I anticipate it's going to be a mess this year when I'm doing stuff. So it's just good to get solid information from a source that's not, speculative.
Well, that's smart. The main thing that got us last year was they passed this thing retroactively. I'm doing tax returns in January and February, and then in March said, "Oh, wait a minute, effective 1/1. Whoa, I already did returns."
Yeah, and that thing about the state not accepting the threshold thing was a real I just kept asking why, and no one could ever give me an answer why the state said no.
There's 13 states. I have a list up here somewhere, but Colorado's one of them. Had data back.
Yeah,
which is just crazy to me. I don't quite understand that methodology.
Neither.
But so far this year, if you've got unemployment in 21, it's taxable. Yeah. There's been no exclusion for the 10,200. And as I said before, they've not allowed anything for non-actors to deduct home office expense. Hey, I have to work at home. There's nothing you can do if you get a W-2. So
really?
Nothing you can do.
Because so many companies
have
not forced that.
They have not changed that. Now, keep in mind, prior to Trump, it was a 7-year change. There's 4 years to go. You can't do it. Which I'm surprised they haven't changed law. That's really surprising to me. Really surprising.
Well,
they've not changed it.
It's Congress.
Correct. Correct. And it's only for 4 more years because the Trump tax cuts were for 7 years.
There you go. Other questions?
The big things this year that changed, not relating to acting, are that I'm having trouble with, we had trouble with last year, is you get a 6419 letter for your advanced child tax payment. If you claim kids in the past, the IRS, they send me the money. I'm not even entitled to it. My income's too high. I got 2 of them and then I opted out. But I got a letter this year in January. It's a 6419 letter. Hey, here's your advanced child tax credit. You have to put that on your return. That reduces your tax credit for this year's child. If you don't remember, I'm sure you remember getting a check. If not, but does everybody know what I'm talking about? You have children, you got the advanced child tax credit, anybody? Yes? No?
No.
I don't know if anyone in the group right now
That's
had
right.
eligibility, but I'm sure there's going to be people who are wondering about that.
And the other issue is the third stimulus check, the 1,400. That's got to be reconciled on your 21 return as well. And it was so confusing last year because the first two stimulus checks went on 2020's return, and the response to it was, yeah, but I got the second one in January. Yes, you did, but it goes on your 2020 return. The second stimulus check last year went on your 22. Yeah, but I didn't get it till January 6th. I understand that, Abner. It goes on your 2020 return. Yeah, but I didn't get it till 21. Abner, it goes on your 2020 return.
Mm-hmm. Mm-hmm.
Does that make sense?
Yeah.
And this year, the third stimulus was 1,400 per person. So that's got to be reconciled on your 21 return as well. And I believe they're not sending letters on that like they did on the first two. I've not seen any yet.
Another question.
Last year when people incorrectly claimed that they didn't get it. I bet I did 20 returns and people said, oh no, I never got the stimulus check. And after a month on the phone with the IRS, every one of them got it. They gave me the exact date. They go, oh, yeah, I guess I did get it. So I'm saying everybody got it. If you don't want me to say that and it's wrong, then you got to call the IRS and wait for a week because I'm not doing it. Does that make sense? That's sad, but that's everybody said that. I mean, I probably do 1,000 returns and 20 people. Oh no, I never got the stimulus check. Okay, I put 0. The IRS adjusts their refund, or they owe. Hey, here's the $1,800 you thought you got that you said you didn't get that you got. You owe us $1,800. What do you mean? I call the IRS. Oh no, here's the 2 deposit dates. I'm like,
Gotcha.
now it's slow refunds big time.
Yeah. Have you heard anything, because on the news they were talking about refunds are going to be really slow.
The main thing I see slowing that down and didn't seem to apply too much here was the advanced child tax credit payments of 30. The child tax credit only for 21 is $3,600 per child under 6, $3,000 for kids under 18. And they were advancing that starting in July. My checks were $179, $180 direct deposit. And I'm like, what is this? Then I finally figured out, and then I could opt out. There was an IRS website, hey, opt out. So now I got to pay back my $300 whatever dollars, which is fine on my return because I make too much money to be entitled to get the advanced child tax credit.
On the news the other day, they were talking about if you're going to file, well, when you file this year, make sure you file electronically rather than a paper return.
Yes, because I've had, oh my God, the paper, think about it this way. Most IRS employees are still furloughed. No one's opening the mail. That's the problem. Electronic filing normally will get you your refund in 12 to 15 days. The only thing slowing that down this year, again, not pretty much MA to this group, was the advanced child tax credit. People not calculating that correctly. Or the stimulus check for that matter.
Right, and then it flags it and they have
to they slow it down and they got to pull it and look at it. But no, I discourage, I'm a preparer, as a preparer, over X amount of returns, I'm well over that. I'm required to e-file. Now, if you tell me you don't want to, there's actually a form I have to fill out, an 8439 grants form that I fill out that says, here's the taxpayer elected to paper file. Here's the reasons taxpayer elected. There's some forms that you can't e-file. Got a reject code. Maybe your wife changed your name. Social Security didn't acknowledge that. But there's a form I have to attach with your return if you file a paper return. You elected to file a paper return. If you want a refund, I definitely would not file electronically. If you owe money, absolutely send your check and it will take 6 months to clear.
Oh, you mean if you don't have, if you don't have a refund.
Well, you can e-file. You can e-file if you owe. File your return because then you're timely filed, but mail your check.
Right.
Don't pay your money online. I mean, I can tell you a horror story. I got a guy that sent a $45,000 check, July of 20, hasn't cleared.
You're kidding.
$45,000.
Is the check invalid after that period of time?
Well, we're going around, right? Then we filed an amended return. We paid some more. It's a long story. Has not cleared. How do you? That's another story. Has not cleared. $45,000 18 months ago. 18 months. Not July of 21, July of 2020. There you go.
Oh, wow.
Hey, Mark, so someone else is asking about medical expenses and how much can be written off?
Generally, my answer to that is you have to be sick or dead. I'm not trying to be a smart ass. You can write off the amount of medical expenses that exceed 7.5% of your adjusted gross income. Now, you cannot count expenses for if they're paid for out of an HSA, or you cannot count your health insurance if it's pre-tax. Okay, those are the two caveats to your total medical expenses. Now, I do have some people. I have a lady in Detroit or Michigan that goes to Mayo Clinic all the time. There are mileage there. There's some rooms there. All that's deductible. But 7.5, that's the amount that exceeds 7.5% of your income. That's threshold 1. Threshold 2 is you have to itemize. Standard deduction for married people is 24,850 maybe, and singles have that 14,000. You got to get over that. So there's 2 thresholds. But the other thing sometimes people miss on that is the cost of infertility treatments. What's it called?
In vitro.
Yes, in vitro. Correct. That's a deductible expense.
Really?
But again, you got to get over 7.5% of your income. Correct. Did that answer your question?
It did. Thank you. Thank you.
One of the other questions out there is, are there specific things that tend to trigger an audit?
What triggers an audit is every tax return is scored by what they call a DIF score, DAF, discriminant income function. They've been sued on the IRS has been sued under the Freedom of Information Act, and it stood up in court. They're not going to release it because if they did, then you'd file an audit-proof return. The main thing that gets you, I don't want to say audited, correspondence auditors. Oh my God, the letter is not matching 1099s or W-2s. Sometimes you don't get a W-2. You moved and went to a different address. Last year, particularly, there's a lot of people that had fraudulent unemployment claims under their Social Security number. And we had to report those. And then how do you do that and what do you do with that? That caused a problem.
I'm sorry. What did you say about the W-2s? It just was a little fast and I didn't quite say it.
Sometimes what leads to, I call correspondence audits, is not reporting all your 1099s or your W-2s.
I see. Okay. Thank you so much.
That's a laydown. You can inflate the shit out of your expenses. Who cares? But if you don't report a 1099, oh my God, they're going to know because they match it. As far as what triggers an audit, again, I would say the size of your Schedule C loss and perhaps the number of years that you've had it. The one thing that they have changed over the years, 30, 40 years ago, is auditors now go across all industries, which makes it somewhat easier to talk to them. Before they had an actor, they had an IRS agent that only did actors. And that was a little harder to sell because he knew what he was talking about. Versus the guy that did a car lot, then he did an automotive dealership, then he did a junkyard, then he did a tool yard. Now he's doing you. It's easier to get by with stuff with him. The hard part now that I find in audits is everything's correspondence. Hey, send me this, this, and this. And then you send it to them. And first, when they come in, you can kind of see what you got. You can develop a rapport. Maybe you don't have to produce a receipt because, oh, yeah, I remember that, whatever. Now it's all correspondence audits.
Meaning that you get a letter and they're requesting documentation.
Correct. I've hand-delivered stuff to the IRS before. Couldn't see the guy. Couldn't go into the Holy Grail, but left it at the door for the IRS agent. They took it up there.
Huh.
And I had signed for it. So they didn't say we didn't get it.
Now, I remember hearing years ago that they're saying that if you deducted an office expense, a square footage, that would put you in a higher category.
I don't believe that. That is an old wives' tale that I've heard. I don't believe that. But again, I would encourage you to make it be exclusive and regular.
So if you have a general use office that you pay your bills and all of that.
I would take it. I would take it.
Okay.
But I wouldn't take it if I had a desk in my bed.
Right.
And a bed.
Or a corner.
Yeah, correct. Again, of course you're comfortable. Correct. Hey, there's my bedroom and there's a desk. Well, that's not really an office. But whatever. Or exclusive and regular office. But I would take it, but I'm aggressive. But go ahead.
Right.
Anybody else?
Yeah. I also, for years, my grandfather would always tell me, when in doubt, deduct.
Absolutely. Absolutely.
Along those lines, the question was asked, do people need to make over a certain amount to be flagged for an audit? Does that play into it at all?
The audit rate for people that goes over Schedule C's over $100,000 is like 10 times higher. The audit rate's plummeted recently, though. No, I think where you see a lot of lower income earners getting audited is fraudulent claims for the earned income credit.
Mm-hmm.
two people live together. He makes $100,000 a year. She makes $10,000. They're not married. She's going to claim the 3 kids to get the earned income credit. Well, no, honey, you can't do that because your $100,000 your husband pays for everything. It's just a thing to get more money back. That's where you mainly see the attacking the lower income earners. There's so much fraud in earned income. It's ridiculous.
Got you. And we have another question, very specific question. If you owe on a previous year of taxes, can that be part of your deduction for the current tax year?
State taxes only are deductible on your federal return, not federal taxes anymore. No.
Gotcha. Thank you.
As opposed to if you indeed have owe money from the previous year
or in another state, that's a deduction.
It deduct, but on your where you think you're getting a refund this year, but you owe from last year, you're not getting a refund.
Correct.
They keep track of those records.
Sadly, they do.
I have had experience with this. The other question is, there's a lot of frauds out there. People trying to, con, particularly elders, out of money. Are there particular, fraudulent, things out there that you have run across that?
I've seen returns come back declined electronically because it says another return may have been filed under your social.
So that's one of those. That
correct. What I recommend my clients to do, and I can't do it, you get an identity. I call it a PIN. I believe this actually an IPP. And you can call the IRS and have give you a PIN every year, and you actually get a different number every year and a letter. And I can't file your return till you give me that PIN number to put in. That kind of gives you some identity theft protection. But they mail you the same letter with a different number every year. Does that make sense? That is a good way to protect your identity so nobody files their return on you. But last year, there's a lot of fraud with the unemployment. God, I'll bet 25% of my people had fake 1099-Gs that they did not get unemployment, but they got a form in their name.
So somebody else filed under their
name. Mark, could you repeat that one more time? I don't know about anybody else, but that kind of dropped out on my mic.
Last year, we averaged about 25% of the people that came in that had unemployment, a 1099-G. They didn't get the unemployment, but somebody claimed it in their name and they got a form.
Well, the recommendation.
Most of the time, it didn't matter because the 10,200 could be excluded or the form could be excluded. But if you didn't get it, you tell me you didn't get it, I didn't put it on there. It's not taxable. We can prove that it wasn't you. I've yet to see them tracking that. I could just see Colorado coming back going, hey, we sent you a form. And remember, Colorado didn't allow the deduction. Hey, where's your tap? The guy never got it. And we tried. Colorado was so unresponsive. People would call the Colorado Unemployment Office for days trying to get a 1099-G corrected. We didn't happen. Still got clients back from last year. So if you didn't get it, you tell me you didn't get it, you would know. You're going to be honest. You're going to claim forever. I'm not putting it on there. It's not taxable. I don't care what the form says. But that leads me to the PIN discussion. You should probably get your identity protection PIN from the IRS to protect yourself moving forward. But it's a different number every year. Questions?
A verbal question. It's a little lengthy. I'm sorry to go back to mileage, but I have a couple of voiceover narration jobs. One of them is a W-2. I am an employee and I pay taxes. The other, I'm a contract employee and I don't pay taxes. So for the one that I'm a contractor for, even though I go regularly during the week, would I claim that mileage as business mileage?
Absolutely.
Versus with the one I go to that's a W-2, I'm an employee, I would not claim that.
Correct. It's commuting.
Okay. Thank you so much for that clarification. That really helps.
Ma'am.
One other question I had: if you do get a call from the IRS, I guess that's the question. How would they contact you?
letters only, mainly certified, I think is bad enough. They will never call you and go get us a gift card at Target. No, they never call. They get a scam. And
Right.
most of the time, if you look at the phone number, it's not an 800 number. It's somebody's, different area code. Or the best thing you could do is say, give me your phone number, I'll call you back, and you do, they won't give it to you. They were not going to demand money immediately. I mean, you're several certified letters away from that. That's a good question.
Yeah, so that's my point, is that the way that they will contact you initially is by a certified letter.
When it gets really bad, a certified letter. Yeah.
From the USPS.
They'll send you 5, hey, you owe us. Then letter 6 is, hey, buddy, you're certified. We have 15, 20, then
Right.
you got an issue. They're
Yeah.
not going to call you.
Yeah, I have had some experience with this topic. So they will not call you. That's a scam.
Correct. Now tell them you want to talk to your accountant, they'll hang up.
That's thank you for that. That's good clarification. We have another question. They write, for clarification, should I right now request a new PIN relating to 2021 return presently in preparation?
Wow, that's a really good question. I would say yes. My problem would be, and I don't have any experience with it because I don't get them for me, is how long that would take. Would that delay you filing your 21 return? But yes, I would absolutely start getting one. And you may be able to Google and find out how long it takes. You might get it instantly if you did it online. I don't know. But I encourage everybody to get one. That's a very good question that I can't really say I know the answer to. Just when you were
Thank
touting
you.
my strength.
Thank you. Bruce asked that question. Thank you.
So quick question. So instead of using your social security number, you would request a PIN number?
No, you still put your social on the return. What this
Okay.
does is, like on an information worksheet, you have to enter this PIN number to e-file your return.
Okay, great. Thank you.
And most softwares are now redacting the first 5 digits of your social anyway. There has been talk about not putting socials on returns. I know recently they just, in the last couple of years, started allowing you to redact them on the W-2s because they were in the mail. If the envelope didn't fit, people were getting, hey, here's your W-2. Oh, by the way, I can see your social too. Thanks. So they've just now started allowing the last 3 or 4 years redacted numbers on Social Security. And there has been some talk, although I don't know how logistically it would work not putting socials on returns, but the IPIN number goes on an information worksheet that then allows you to e-file your return.
Thank you. Thank you.
Excellent. Excellent.
So is that you would get the PIN from the IRS site?
Yes. Let me see if I can find out some on my phone when you guys, because that's a good question. Because I have had some people that have got that letters like, well, I didn't file a return. Well, and normally it's not fraud. Sometimes it's just a mistake. Somebody hit a wrong digit. Maybe it's the IRS and your social got instead of somebody else's. Let me bear with me a second.
Are there any other questions while Mark's looking that up?
I just wanted to comment, I use TurboTax every year, and I typically wait until I'm all ready to submit my file to the IRS, and it requests the PIN at that point. Click here. I get it within about 2 hours usually.
There's your answer. But that's in your software, you're saying.
Yes.
Well, that would indicate that it's an online like API or something. So it should be fairly quick.
I'm just looking at irs.gov. It's frequently asked questions about identity protection, personal ID numbers, IP PIN. Talks about what it is. So you could go on there and just Google IP PIN and you would find some facts on there. I appreciate your input, sir. I have never gotten one because I can't get it for my clients. But if they get one, I need it every year and they think, oh, it's the same number, and it's not, which makes a lot of sense if you're trying to protect your identity, that they would change it every year. Now, I have seen married couples, only he has one. I've seen married couples, only she has one. I don't think I've ever seen a married couple both have one, which is odd. But. And thank you for your input, sir.
Other questions? Yes, Bruce.
Yeah, I gotta go to Mike. Brian, your comment about the PIN through TurboTax. Is there because I use that too. I'm working it right now for the 2021. I can make a request for an IP pin through TurboTax right now.
When I have my return all ready to send to the IRS, it seems like that's outside of TurboTax. And I try to send the return electronically to the IRS, and I immediately get back a thing, what is your IP pin? If you don't have one, click here. And then that comes back real fast.
Okay.
So it seems like that's with the IRS and not with TurboTax.
All right. One more comment.
But
That goes.
pretty much, it's instantaneous, pretty much.
Well, it was a
Well, you
couple
s-
hours. I think, it was the middle of the afternoon, and I said, "Oh, it's going to take a little longer." And it was there the next time I went back to my computer.
That helps because like I say, I don't do that. And I probably do 1,000 returns, and I'll bet less than 10 people have IP pins.
Yeah. Well, with the government, 2 hours is instantaneous.
Right, exactly.
Can I add one more question here? This goes back to what Mark advised on file electronically, pay by mail. And I'm forgetting my question now. I just wanted a clarification on the IP pin.
When you file electronically, normally you can either enter your bank account, write it, I guess TurboTax, they take it out, or you can print, if you say I'm going to send them a check, it'll print a 1040V voucher. You mail that to Cincinnati, San Francisco, that you put on the slow boat. But then you file electronically. You just haven't paid online. Does that make
Okay.
sense, Bruce?
Yeah, that clarifies it. Thank you.
Any other questions?
You
I
guys
see
have you've been a good group. You got a lot of good questions.
I see a quick question here, Mark. Why pay by mail if you've filed electronically?
Get more float. That'd be the only. I mean, if you have the money, it's not a big deal. But I definitely wouldn't mail my return because, as I said, people aren't processing paper returns. They're so far behind on paper returns because they've been furloughed. Absolutely. And keep in mind, if they don't get your check, Bruce, they're going to penalize you. But it's going to take longer for them to cash. That's all I'm saying. It's just a float thing. Does that make sense?
Yeah. It may take them several months to take it out of your account.
Correct. Versus online, it comes out. Normally, when I do it online, I say pay it today. It takes 2 or 3 days before you call and say, hey, it came out. Versus mailing them a check that may take 2 months to cash. You're still, you're going to get penalized if they don't get the check, but it's just a float thing.
Got you.
So, and that's really depending upon your personal
No,
situation.
on your financial situation, correct. But I definitely would not file a paper return.
Ever.
Correct.
And there was a
Recently,
question.
They just started accepting amended returns electronically too, which helps. They didn't used to do that. 2 years now, I think you can do 1040Xs electronically. Go ahead, Edmund.
Oh, sure. There was a question about, and Adrian, I'm not sure if it came out completely on the chat, but what I see here is itemizing and being married. What is the dollar amount to itemize?
The standard deduction for married joint, I want to say, is 28.4, I believe, is this year's number. And on top of that, if you're single, let me verify. Maybe it's 28.450. Hang on. Oh, standard deduction. Excuse me, 25.1 for married joint. Single is 12,550 half of that.
Terrific.
25,001. And keep in mind, it's only the amount over that helps you. So if you get to 25,101 and you're doing high fives, it helps you by $1
Molly.
because it's only the amount over the standard.
Okay, great. Thank you.
Thank
You've
you.
been helpful, guys. I'm going to say goodbye and thank you so much. This has been
Thank
great.
You're welcome. Thank you. You're welcome.
May I ask an on-mic question again? So I live with a roommate who obviously helps with expenses and rent. If I were to, and I have a little home studio and a closet that I would claim as my home office, exclusive and regular. If I were to deduct that, it's a percentage of it's a percentage of the total square footage of the apartment or a percentage of the total rent that I pay?
If you do the actual method, if you're renting, I would absolutely do that. It would be whatever your expenses are, the rent, your renter's insurance, your utilities, times the business percentage use of your house. The example we were using was 10%. Did that, you tracking?
I think so, yes. So then I would want to make sure to say, like, for the rent, for the actual method, the rent is my portion of the rent, not the entire.
Absolutely. If you own, you do not want to use actual because of that recaptures ordinary income. But if you're renting, by all means, take the actual method, correct. And just square footage, total square footage of the apartment, total square footage of the office.
Okay. And then, because I'm just trying to figure out whether, and I don't know if rent comes into it or not, I can't remember, but I only pay half the rent. I don't pay the entire apartment's rent. Does rent come into the actual method at all?
Yes, however much rent you pay, if you're paying for one room, I think you're gonna have a hard time taking an home office. I mean, if you're running a 3-bedroom house and you're paying for one bedroom, I'll leave that up to you, but I'm not sure your particular circumstances. But if you're running a 3-bedroom apartment and you're paying for one apartment, home office, I think it's going to be tough. But if you did, it would be the amount of rent you paid, not the total amount of rent of the apartment.
Yeah, okay, thank you. Appreciate that.
Yeah, my daughter for years sublet an apartment in New York where she had one part of a bedroom. So it would be very difficult to kind of just.
Oh, the New York situation is ridiculous. I have a client whose son actually is involved in billions and has an apartment in New York. And I have to send the dad's taxes to these people every time he changes apartments. And the father makes millions, but the kid doesn't do bad, but he doesn't make enough to qualify.
Right.
So the dad's still on the hook for the kids. And it's ridiculous. I mean, I was in New York. I think I bought him breakfast a couple of years ago when I went to see Suzanne on Broadway. And it's like 800 square feet. It's like $2,500 a month.
Oh,
$3,800 a month. What I mean, it's stupid. I mean, but whatever. But his dad's paying it, so.
Yeah, hers was like about 1,100 square feet. There were actually 3 people living in there, but it was over 3,400 a month.
Right, exactly. Whatever. That's stupid.
And this was about 90th and 1st Upper East. So nice area, but not that.
I understand.
Understand. I'm sure.
We got about 10 minutes to go. Does anybody else have anything we haven't talked about? Or would have more questions on? Maybe I should give you guys my email, perhaps, and my phone number.
That's what I was going to ask. Are you taking new customers?
Yeah, I'm taking new. Okay, let me give you I don't have best. I can show you my card. I can just read it to you.
Well, I will send that.
Mark, would you write it in chat, Mark? Write the email in chat.
All right.
What's your email there? You want to
go ahead?
Type that?
It's Mark at 5280 tax.
Right.
MARK at.
If I can type.
At 5280 tax.com. There you go. And my website is 5280tax.com. And that has bios, directions, etc. And the picture can't scare because we've already got to do that, so that's good.
And I will send out in a little post email to everyone Mark's contact information. Is that light?
And if you have a question, just let me know. I'm going to charge you if it's just a simple yes or no. Or I got a 5-minute thing. I'm not going to charge you. Just remind me why you're calling me. Hey, I was on the webinar with T. David and Abner, and then I'll put it together.
Terrific. Well, I hope you all join me in thanking Mark and T. David. This has been excellent. Lots of great information. That bar is high as far as I'm concerned, and that it's just been terrific. Thank you for all of that good feedback. Yes, wonderful. Good to see your all faces. We're still connected, even though we're not connected in this crazy reality. But this was much appreciated and couldn't come at a better time. So thank you for all of that.
All right, so I'm going to start with the joke. I'm going to.
Oh. I don't know about you folks, but Mark is frozen.
Don't give up my day job. You ask them a question, they do this. It's what they're so.
Mark, you froze just long enough for us to miss the entire joke.
Aren't you lucky? All right.
Sounds good.
Thank you,
Great,
guys.
folks.
I appreciate it. My pleasure. Abner, nice to meet you.
Nice to meet you. Great. And folks, we have another workshop coming up on February 7th, just letting you know. Look online for details on that, on our workshop on dialects. And thanks again. Hope you all have a great day.
Thank you,
Bye.
Abner.